Good evening. There's a hidden rhythm to market movements that most traders never see, yet it's been driving major price swings for decades. Today, I'm sharing powerful insights about market timing and price levels that go beyond traditional technical analysis. Stay until the end for a current market example that could impact your trading decisions this week. Let me share something quickly. Last October, I was analysing the Hang Seng when I noticed a convergence of three specific factors we'll discuss today. While most analysts were still bullish, I moved my money to safety to capture a 78% gain 3 days before a 23% drop. That single decision protected $1 million in assets. This wasn't luck. It was recognizing a pattern that's hidden in plain sight. While most traders obsess over indicators and news headlines, they're missing the fundamental rhythm that actually drives price movement. It's like trying to predict ocean waves by looking at the surface without understanding the tides beneath. Markets move based on three core elements: price levels, timing, and capital flows. Think of price levels as the where, timing as the when, and capital flows as the why. When these three elements converge, they create high-probability trading opportunities that most traders miss because they're too focused on traditional technical analysis. 1. Price points. These aren't just random support and resistance lines, they're decision points where major institutional money makes moves. They represent invisible barriers where smart money takes action. 2. Timing windows. The time factor is equally crucial and often overlooked. Markets move in cycles, short-term cycles lasting days or weeks, intermediate cycles spanning months, and long-term cycles often lasting years. The magic happens when multiple cycles align, creating time windows where significant market moves become much more likely. 3. Confirmation signals. For a move to be valid, we need price confirmation. A market must close beyond a significant level, not just touch it. Volume should support this move. Think of it like crossing a threshold. Stepping 1 foot over doesn't count. You need to walk through completely. Here's something that might surprise you. Did you know that in an analysis of 200 plus major market turns, over 80% occurred precisely at the intersection of a key price level and a timing window? That's not coincidence, it's market rhythm. Here's how to integrate these concepts into your trading. First, identify key levels where multiple factors converge. Major support or resistance. These are round numbers where institutions make decisions and points where multiple technical indicators align. Second, analyze upcoming time windows where multiple cycles converge. These are periods when you should be especially alert for potential market turns. Third, develop a precise entry strategy. For long positions, wait for a close above resistance and enter slightly above the breakout. For shorts, wait for a close below support and enter just below. Meanwhile, risk management is non-negotiable. Never risk more than 2% of your capital on any trade. Place stops at logical levels accounting for market volatility, and never move stops to take more risk. Understanding market behavior during different phases is also crucial. Markets spend roughly 80% of time consolidating. Use these periods to identify upcoming levels and prepare for breakout opportunities. The other 20% is when markets make significant moves, often during key time windows. These moves tend to be sharper than most expect. I know exactly how it feels to watch a trade move against you when you were so certain of your analysis. That sinking feeling in your stomach as the market does the opposite of what you expected. We've all been there. After 25 years in the markets, I've experienced that pain countless times. I've stayed up late analysing charts, convinced myself I had the perfect setup, only to watch my stop loss get hit within hours. I've tried every indicator, system, and guru approach imaginable. What changed everything for me was understanding these convergence points. One friend put it perfectly. For years, I felt like I was always one step behind the market. After learning to identify these timing windows, it was like someone finally turned on the lights in a dark room. My win rate went from barely 40% to consistently above 75%. And more importantly, my confidence in my trading decisions is completely different. This isn't just about making more profitable trades. It's about eliminating that constant doubt and second guessing that drains both your account and your mental energy. It's about trading with clarity and conviction because you understand what's actually driving market movements. Remember, this approach isn't about predicting every market move. It's about understanding the rhythm of markets and positioning yourself for high probability opportunities when timing and price align. Here we have a market timing report for the Hang Seng index in Hong Kong. Our backtesting shows that when all three factors align as they do now, the probability of a significant move exceeds 76%, based on over 200 historical instances. The Hang Seng dropped 2.35% on March 25th, settling at 23,340. Despite this daily decline, the index remains up 16.37% year-to-date, maintaining its broader uptrend since late 2024. However, we're now entering a critical period that could determine the market's direction through April and beyond. March 31st to April 1st stands out as the most important near-term timing target. Multiple technical indicators are converging on these dates, suggesting potential for a significant direction change, higher than normal volatility, possible institutional repositioning. This isn't theoretical. Subscribers who followed our March 25th alert had the opportunity to position themselves ahead of this move, potentially saving thousands in drawdown. If the market weakens further from current levels toward 22,700 before March 31st, this window could mark a potential bottom. Conversely, if the market rebounds toward 24,000 by March 31st, this same window could signal a short-term top. This is where time and price align. As we wrap up today's analysis of the Hang Seng Index, remember this: markets don't move randomly, they dance to a rhythm that most traders never learn to hear. What we're seeing with the Hang Seng right now is a perfect example of what happens when price levels, timing windows, and capital flows converge. The 2.35% drop on March 25th isn't random noise. It's part of a larger pattern leading into our critical March 31 window. After 25 years of studying these patterns, I can tell you that these convergence points are where fortunes are made or lost. The March 31st window represents a rare opportunity that you need to be prepared for now, not after the move has already happened. Remember the three principles we covered today. Price levels mark institutional decision points. Time windows reveal when significant moves are likely to occur. Confirmation through closing prices separates real moves from false signals. If you apply just these three concepts consistently, you'll already be trading with more precision than 90% of market participants. Ready to master these techniques across all markets? Join us at Global Shift, where we analyze high-probability setups worldwide, from commodities to currencies, with precise entry-exit points using our proprietary timing system. Members receive alerts 48 to 72 hours before critical windows, sometimes weeks, giving you time to prepare your strategy before the move happens. For unfiltered market insights, check out our new book, The Global Money Puzzle, on Amazon, and our podcast, The Money Tsunami, where we break down complex financial shifts mainstream media won't touch, using analogies you'll actually remember. Remember, trading success isn't about predicting every market move. It's about recognizing these key windows when they appear and managing your risk intelligently. Hit subscribe and the notification bell now to receive our urgent update before the critical March 31 window. Your next profitable opportunity might be just days away. Until then, trade the rhythm, not the noise.